All right, so let's talk about the Series I savings bonds and what a Series I savings bond is. A Series I bond is a non-marketable interest-bearing U.S. government savings bond that earns a combined fixed interest rate and variable inflation rate adjusted semi-annually. Series I bonds are meant to give investors a return plus protection from inflation. Most Series I bonds are issued electronically, but it is possible to purchase paper certificates with a minimum of $50 using your income tax refund, according to Treasury Direct. So you can buy these directly from the U.S. Treasury. If you go to treasurydirect.gov, it is a government website. A Series I bond is a non-marketable interest-bearing U.S. government savings bond. Series I bonds give investors a return plus inflation protection on their purchasing power and are considered a low-risk investment. The bonds cannot be bought or sold in the secondary markets. Series I bonds earn a fixed interest rate for the life of the bond and a variable inflation rate that is adjusted each May and November. So in 2022, you had a 9.62% rate or yield from May 1st to October 31st, and you could have locked in that interest rate or that yield for those 6 months. And then from November 2022 to this year, April 30th, you lock in a 6.89 yield or rate because as it said, it's a adjusted inflation or CPI and semi-annually rate. So it can change if inflation goes up or down. So it went down a bit. So 6.89% is still a good rate to lock in. And they give you 6 months to lock it in. So it's coming up on that time period again to where it's going to change. And it's probably going to go down some. So 6.89% is still a good rate or a good yield to, have for your money. As it said, it keeps your purchasing power pretty good. So let's go back. These bonds have a 20-year initial maturity with a 10-year extended period for a total of 30 years. So if you can lock in $1,000, or I think you can buy the minimum amount is $25. You can buy through the Treasury Direct website. And I think the maximum amount is you can buy $10,000 worth at a time, I believe. So, take that money and then you take that annualized rate. And, that's a nice return on your investment depending on how much you invest. So, and it's guaranteed. So it's not going to fluctuate, after you lock in that rate. So it's not like buying Apple stock or, buying Bitcoin or even buying real estate, whether it's residential or commercial. Because even with real estate, that land has to, it has to go up in value. Like it has to be valuable for it to increase in price. So it's not going to fluctuate, within that time frame. So you are getting 6.89%. So it's not like I said, buying a stock or a commercial residential real estate where, the value depends on, how that company performs, economic activity. Like right now, we're dealing with high inflation, higher interest rates. things like that. So, all that stuff affects how a company can perform going forward. So, you can get a 10% return on your investment, but it's based on how that company performs. But with this, it's for sure. It's guaranteed that that is your rate of return on your investment. That's the yield. That's what, every time you invest your money, that's what that's your return on investment. That's the percentage. So, it's a sure shot. And, during a inflationary period and where, the dollar is, under a lot of pressure as far as the currency, and like I said, inflation, which affects purchasing power. You want something to hold the value of your money. I already talked about gold, silver, and other commodities and metals that you can potentially put your money in, park your money in for a period of time to kind of weather the storm of, economic activity, high inflationary periods, recession risk, things like that. That is the time where you want to invest in different other vehicles, other assets, other securities to kind of keep the purchasing power of your money or your currency, I should say, and hold the value. And as you can tell right now, gold and silver has been increasing in price. The dollar has been decreasing in value. Inflation, has been going down, but it's still high. So, you lost a lot of purchasing power. So whatever a dollar, gave you with 2% inflation, it don't give you the same amount at 5.5%, 6% inflation. So you lose a lot of purchasing power when it comes to that. And then, price increases. So these are just different vehicles you can use to park some of your money in. And you don't have to leave your money in a bank account that doesn't give you a good yield. So 0.02% is trash. This is giving you, a Series I bond is giving you 6.89%. Even a EE bond is giving you 2%. So, these are just more sure shot vehicles where you can purchase these securities and you personally write directly from the government. So it's nothing to be afraid of. These are for sure, guaranteed. You're going to get your money back whenever you sell, your treasuries or your bonds. So you don't have to worry about, buying companies or buying businesses through the stock market and, worrying about the company losing value because of whatever. Or, buying cryptocurrencies where, it's very speculative, it's very risky. You could lose the value of your money within a day because you don't understand the security. And this right here is pretty clear cut and dry to what you're going to receive. So it's a safe and very low risk investment. So that's all I have. Take a look at some of the other videos that I have. Also, I'm going to put my referral links to, some of the companies I use to buy gold, silver. And like I said, you can go to Treasury Direct and buy savings bonds, and you can buy treasuries as well. Just make sure you read, research, do your due diligence, plan left to look right, or plan right to look left. And, just make the best choices for your family. All right, peace. The resources and the information that I provided in this clip was from Investopedia, which you can find the definitions on all financial and business information if needed also the Treasury Direct website.